This is the Trading Psychology Podcast. This is VP, creator of No Nonsense Forex and author of the book No Nonsense Forex Trading Psychology. And with me, as he is every week, it's Rob Reinhold.
Hello, everybody. This is Rob Reinhold with Maverick Currencies and Maverick Trading. And I want you to imagine me right now with one of those white lab coats because we're going to be going deep into your brain and go over more chemicals.
Yes, the Crazy Rob Brain Chemistry series is well underway. Last week we touched on dopamine, and if you're somebody like me who doesn't maybe really never paid attention to these things before, we've always heard of these brain chemicals, but we never really stopped to think what they are and how they differ from each other. Rob, before we get started, since this is mostly going to be your territory again, would you give us a quick explanation of the difference between dopamine and adrenaline, just kind of like the elevator pitch between the two?
Absolutely. And look, I'm going to have to say this again. I am no expert. I read. I know what other people are saying about how the brain works. I'm going to give you a breakdown of what my interpretation is. I highly recommend to go to smarter people than me and get more information. But let's talk about dopamine. Dopamine was the reward chemical of the brain, and we talked about that in the last episode. And it's the chemical that basically goes out and says, hey, you did good, or hey, that was good, or hey, do that again. That's what dopamine is. In this episode, we're going to be talking about adrenaline. Now, adrenaline is also called norepinephrine. That's quite a mouthful, so adrenaline, we're just going to use adrenaline. Norepinephrine is actually made from dopamine. It's converted in the body over into adrenaline, but there are some similarities to it, but the reactions to the body are wildly different. Last episode, we talked about dopamine and what it was for and how it was released. This one is more primal. Adrenaline is very, very primal. And what happens is, this was from our primal days when we weren't sitting behind computers, we weren't driving in cars, we were trying to survive. And there's a part of your brain called the amygdala. And this has also been called the lizard part of the brain, I've heard it called, to where it's very, very primal. And the amygdala is there to assess risks. Now, back in the past, if you were a caveman and you turned the corner and there was a saber-toothed tiger, your amygdala goes into action and it signals. It says, holy cow, get ready for action. And it signals to your hypothalamus. Your hypothalamus sends a signal to both your heart starts beating faster. Now, it's pretty interesting because the first thing that has to happen is your heart has to start beating faster because the second signal is to the adrenal glands, which sit on top of your kidneys, and the adrenal glands will pump adrenaline into the bloodstream. Now, the reason why the heart goes first is because that adrenaline needs to surge through the body quickly, or else it's going to be too slow of a reaction. So your heart starts beating fast, then the adrenal glands shoot out the adrenaline, and it courses through your body. Now, this is fight or flight. This is fight or flight. You are either going to fight or you're going to flee, but you are going to do something. Now, the adrenal glands also put out a chemical called cortisol. We're going to be talking about cortisol in the next episode and what it does, but in this one, we're going to be talking about adrenaline. So, when the adrenaline courses through your body, the heart rate increases, the blood pressure increases, your eyes actually dilate to let more light in so you can see more things. Blood is sent to the muscles get tensed. It is fight or flight. Now, here is a crazy thing about adrenaline. One of the things it also does is enhances long-term memory. What that means is whatever happened to you in that moment of heightened adrenaline is going to be seared into your memory and it'll be a very important memory for you. So think about all the reasons why our bodies created this system. It was because we needed to survive. We were out there in the wild. We were hunting. We were fighting. All of this is very, very important. Fight or flight. That's what adrenaline is all about.
Okay, so it makes a lot more sense now, at least the difference between adrenaline and dopamine. And I think every human being can relate to things like this, even though our lives aren't quite the same as they were, back in our ancestral days. But the interesting thing about adrenaline is, as great and necessary as it is for our survival, it actually works completely against us in trading. So there's that crazy dichotomy there.
It is definitely not as useful in trading as it is when you are out in the wild trying to survive. But here's the problem. The amygdala doesn't know the difference. It doesn't know the difference between a T-Rex, and it doesn't know the difference between a falling stock price. It will signal there's risk, do something. And this is where a lot of market movements get pushed around. And this is so interesting. And I was talking to you, Patrick, about this earlier, about how the markets are really good at getting people to do the wrong things at the wrong time. Why is that? Because people are using their emotions. And this is part of the sympathetic nervous system that really deals with emotions. And this is why people get things wrong a lot of times when they act in the markets. Let's say that you're in a trade and you have to decide, okay, am I going to sell here or am I going to hold? You would think that that choice should be about 50-50. It's not. It's the same thing as whenever my wife and I go on vacation and we're staying in a hotel. I don't know what is wrong with her sense of direction, but when the doors open up, when we're going up to our room, you would think there would be a 50-50 chance of turning the right way, right? If you didn't know where the room was, you forgot where the room was, the doors opened, you would think it would be 50-50 that she did the turn right or left. I don't know how she does it, but it's like 80-20 the wrong way. If our hotel room is to the right, 80% of the time she'll go to the left. If it's to the left, 80% of the time she'll go to the right. It's amazing. I don't know how she does it.
That's me too. Not only do I do that, when I leave my own hotel room for the first time, I almost always turn the wrong way the first couple times before I figure it out.
I have no explanation for how that works. Like I said, it should be 50-50. If you truly don't know which way to turn, it should be 50-50, but somehow it's not. It works the same way in the markets. When you are going to make a decision in the markets, and you're not making decisions in a rational manner on charts and setups and things like this, you're now using your emotions. And the market is really, really good at getting you to do the wrong thing at the wrong time. And it's really interesting because you can see it. You can see moments in the markets where it is falling. Markets are falling, they're tumbling. And then all of a sudden a surge of volume comes in and you get this really big push down. And I'm always thinking, there it was. That's the bottom. There it was. That was all the people who were out there watching and waiting and holding on and hoping finally got put into fight or flight. And they had to act. It's the same thing with blow off tops. We see these markets going up and up and up and up. And then all of a sudden you get this surge of volume and surge of movement right there. That's the top. It's because the collective world's adrenaline glands are actually firing all at once and everyone is acting all at once. And that's typically when you get market tops and bottoms. It's fascinating. When you really step back and you watch this market and you watch this from a perspective of what is the collective population of the world feeling at the moment, it's really, really interesting.
And I have been telling my subscribers on my channel ever since the very beginning of my channel that this is done on purpose. The big banks who have all those orders right in front of them, so they don't know where your order is, Rob, but they know where most people's orders are. They have figured out this psychology. And they've also been able to put a blueprint in place to where they can just repeat this over and over. That's why you're seeing the same things over and over. I've always said, and maybe we can go back and forth on this another day, but it is done intentionally, because if you had that level of power and you were able to figure this out, and the people at the top are always able to figure this out. That goes down a different rabbit hole. But why wouldn't you do it? If there was no consequence for doing things this way, why wouldn't you do it? And so this has been the root theory for my entire channel for a long time, is everything you're talking about is very well known by the people who pull the strings. And they pull the strings, and it doesn't have to be every trader, it just has to be the majority of traders. And as long as the majority of traders do this, and they keep falling for these same traps because of their own adrenaline, like we're talking about today, this is going to be the case for the rest of our lives when it comes to trading markets.
I totally agree. And this is why there is no place in trading for adrenaline. Let me say that again. There is no place for adrenaline in the world of trading.
Let me co-sign on that. Sorry, Rob. There is no place in the trading world for adrenaline.
Let's go back to what I just talked about. Adrenaline was there for your survival. Adrenaline is there to get your body into the state where you are going to fight or flee. And it's there. And it's really, there's all that you can think about at the moment. Trading is about your prefrontal cortex. You want your prefrontal cortex making all the decisions in your world of trading. You cannot make a decision with your prefrontal cortex with adrenaline surging through your body. It is just not possible. I want to share with you one or two scientific studies that I find very interesting. One of the ones they did, and I love scientists because they're crazy. They think like, oh, let's do this to people. One of the ones they had was 100 people, 50 people, they injected with adrenaline and they made them watch movies. And the other 50, they did not inject with adrenaline and they just saw how they reacted. So the first one they showed you was a action movie. And in the action movie, the people with adrenaline had heightened reactions to everything that happened in that movie. Their heartbeat was faster, their blood pressure was faster, their reactions was faster, they're sweating. They also showed them a comedy, and this one was the one I thought was the most interesting. The people with adrenaline did not find the movie funny. Adrenaline and comedy obviously just do not mix. And then this is the one I thought was interesting. They did a romance movie, and they've shown that with adrenaline, your arousal and attraction with your date or significant other is heightened during that movie. So they actually said that it's really good for you to take a girl or a guy on a date to a movie and make it a scary movie because that actually heightens arousal. So a little bit of a tip there for anyone who's in the dating world.
Couple things on that. One, I've heard that before. Yeah, if you ever, especially if you have a girl over to your place and you want to heighten the mood, a horror movie is really good. Action's really bad. Rom-coms actually are not very good either. Even if you're like me and you don't really think horror movies are all that great, suck it up, put it on anyway. Good things should occur. Now, it's funny though too, the very first part of what you said, Rob. I couldn't stop thinking of the Fast and the Furious because it's not a comedy movie, but there's so much unintentional comedy in that movie. But I can see how like normal adrenaline junkies may totally not think so.
Yeah, those movies are absolutely hilarious. You know, when I see Vin Diesel falling 500 feet from a helicopter and a car hood breaking his fall to where he didn't die, that's comedy. That's funny. I don't know how they do it, but that's absolutely hilarious.
I've seen those movies in theaters. Everybody's laughing. You know, I don't know if it's meant to do that or not, but it never fails. You're right.
Look, and those movies are for adrenaline junkies. And so let's start talking about adrenaline in trading because I am an adrenaline junkie. It's one of those things I've had to come to terms with. I thought, okay, well, I like to be a risk taker. In my early life, I was a skier. I jumped off of everything I could. I jumped off of everyone's roof that I could. I went as fast as I could on rollerblades, on skateboard, whatever it was. And so when I got into trading, I love adrenaline. I love it. I still to this day absolutely love it. And in my younger years, I would put myself in situations where I would purposely get this adrenaline surge. Now, my favorite thing was trading news reports. Like, okay, there's the non-farm payrolls that is coming out at 8:30 on the first Friday of the month. I would intentionally take a large position going into the meeting, and it was crazy because I still remember this years ago. watching the actual to the second, watching the clock to the second. And 10 seconds before that report came and I had my big position sitting there, I remember like the room dimmed. The room dimmed, my heartbeat started going, I started sweating, and there was nothing in the world going on but the payrolls report and the release. That's all that mattered. And that's exactly what adrenaline is supposed to do for you. It's supposed to make it to where you are hyper fixated on whatever the risk is. And I learned that it was really bad for me to put myself in that situation, because what happened was, and we've all done this before, you get out of the position and then you decide I'm going to go the other way, and then it turns around and it goes the other way. So you say, oh, my first position was right. And then you jump back in your first position and then it fizzles. That happens. It's because we are in this state of action. So news reports are really, really bad for anyone who has a problem with this adrenaline. And I was an adrenaline junkie in trading for the first, let's call it 3 to 5 years. And then I realized, I'm exhausted. I'm tired. Let me just go and do something else. What about you, Patrick? Do you have any memories of when adrenaline was coursing through your body on any sort of trading or market activity?
Well, for sure. And for context, I'm different than Rob, to where I am also a risk taker. But mine doesn't have to do so much with being an adrenaline junkie, because I'm not. I like taking very calculated risks. So news events really never were my cup of tea to begin with, but I certainly did trade them, especially early. I think more so for me, though, the adrenaline would happen during the London Open, and then during really any of the events that would happen at 5:30 a.m. Pacific time, after I'd already stayed up for the longest time. So I'm not in the right frame of mind already. But I wouldn't trade those. I would just, if I had an existing position on, which I also advise against nowadays, but that would also have an effect on me. Not to always where I would act, but man, the thing is, during the opens, and especially during those news events, you know what really gets us, Rob, are those charts. The charts go from not moving a whole lot to moving just so erratically and so sharply. You can't help but have a burst of adrenaline when these things are going on, because you're like, okay, it is getting real right now. Sometimes it moves so much it doesn't even trigger your stops or trigger your take profits, which is nuts, because that means you still have to be in front of the screen getting ready for whatever might happen. So yeah, it's a lot. And especially if you're like me and you like to trade multiple pairs and you're sitting there constantly, going between all these other pairs to see what they're doing. Some of them are moving really fast. Some of them are not moving at all. I mean, it's an absolute rush. It really, talking about this, even talking about it out loud, it's no wonder why people fail in this business, just because this, like you said, this works against every rational trading bone in our body, but it's something we all have, especially as men, because we were the hunters. So yeah, I mean, I don't know if that's really much of a story, but that's how I experienced it personally. And after a while, I just did everything I could to try and get rid of it or try to mitigate it over time.
Well, that's a great segue. Let's talk about that. Let's talk about what you can do to eliminate adrenaline from your trading. Because as I said earlier, and Patrick, you confirmed it, adrenaline has no place in trading. No place. So let's go down the list of things to limit or eliminate adrenaline. I'm going to start off with the first one, position sizing. Now, I know all of you have done demo trading. Demo trading doesn't bring me much adrenaline. What about you, Patrick? You get that huge rush of adrenaline on a demo trade?
Almost none, no.
Yeah, there is none because there is no risk. The amygdala doesn't foresee any risk. And so when you get into the world of real money, that amygdala is going to be judging the amount of risk. Now, if you have a large position size, all of a sudden that amygdala is going to be like, this is a bigger T-Rex, or this is something different. And it's going to fire off that signal. So position sizing is the number one way that you can keep adrenaline out of your trading. If you make your position sizes the appropriate amount to where if you take a loss, it is no big deal whatsoever. That is absolutely going to help you out. At Maverick Trading, which is our stock and options trading division, we utilize a system called basket trading. Now, with basket trading, what you do is you say, hey, I'm going to put 60, 70% of my capital at work in the market. Now, look, you would never do that in Forex. You would not last more than a week. But in options, you can do that. And what we do is we say, hey, we're going to take 30 different positions, all of 2%. Can you imagine having 30 different positions, some long, some short, some sideways, and all, you could lose a couple $100 on each. And you had that whole big basket. You cannot hyperfixate on one of those positions. It doesn't matter. All that matters is how's the whole basket doing. And what happens is that eliminates this hyperfixation because amateur traders, they utilize what's called singular trading. Singular trading is where everything's on one trade. And that one trade is binary in nature. And it just brings in more stress, especially if the position sizing is too big. Patrick, I know you are big on position sizing. I think this is the number one thing you need to do correctly to have success in trading. Before a chart, before technical analysis, before anything, position sizing. What do you think?
Well, I've said this for a long time. Yeah, if you don't have your money management right and you don't have a dedicated blueprint in place that you use every single time, then you really shouldn't be trading. I mean, I keep looking back to that 99.9% fail rate in the Forex market, and it becomes really obvious over time because there's such a large swath of traders. I don't know how big this number is. I would wager to say, because I think most traders are rogue traders, probably over 50%, maybe getting into that 70% range of people that don't even do this part. They just they trade on instinct. That includes their position sizing, which is just so crazy to people like you and me. But yeah, I think this is an absolute prerequisite if you're ever going to have any long-term success. You might have some success early on, which is going to poison your brain even more. But yeah, this is non-negotiable in every sense of the word.
Awesome. We definitely agree on that. Number 2, avoiding news. News is very easy to avoid. You just have to be aware of it. You have to look at calendars. You have to be involved in the markets. That's pretty easy. Now look, there are 2 kinds of unknowns. There's known unknowns, which are easily avoidable. A known unknown is where we know that we have the FOMC meeting on Wednesday, but we don't know what's going to happen after it. Okay, that's a known unknown. We know at 2 p.m. Eastern Time that something is very, very likely to happen. Avoid it. It's very, very easy to avoid that. Now, the ones we can't avoid are the unknown unknowns. The unknown unknowns where there might be something like a terrorist attack that causes the market to go crazy. There's no way to prepare for those, but there's absolutely a lot of ways to just avoid the known unknowns. If you have any problem with adrenaline or controlling, just be aware of what's on the calendar and avoid those moments.
Yeah, and this is something we touch on a lot on the channel too, and it's gotten a lot more difficult over the years because of the Fed and the way they have completely taken over sentiment in the market. But it doesn't mean the blueprint's not the same. You just have to adjust it a little bit as you go. Now, interesting enough, Rob, and so to go back to what we said on this podcast before, Rob and I trade very different. Rob trades intraday, and so adrenaline is much more of something he needs to manage than me with going to daily charts. But when it comes to news also, I always avoid big news events. Rob actually embraces them. Now, what's really interesting, and I can say this firsthand, I would never recommend anybody do this unless you are with Maverick Trading, because somehow these people have a way to counterattack what the big banks do to people during these news events, and it actually works more than it doesn't. But then again, they've been doing it for a very long time. They have a very regimented system in place here. For your average person that is not a part of that ecosystem, absolutely avoid news events. Have your trades closed down. If your trade is in profit, put it to break even. I have a whole video on as far as giving you a blueprint on how to do this yourself. It's called Forex News. So if you just want to type that into the search bar when you go to my channel, it's a really good reference if you've already forgotten. And I say this too, Rob, because I know, just looking at our metrics, we have an abnormal amount of people who listen to this podcast on podcast players, which tells me that a lot of those people are not no-nonsense Forex traders, and they are probably not Maverick currencies traders either. So we're kind of speaking to everybody here. So if you've already heard all this before and you know, okay, VP, this is obvious, we don't do this. No, listen, we're talking to a lot of different people here, and they have to understand too that as much as you might like it, as much as that might feed your adrenaline, and that's one of the things about Forex trading that you really like, if you want to have sustained success over time, either do it in a very regimented way that has a proven success record like they do at Maverick, or just do what I do and make sure you're completely out of the pool or most of the way out of the pool when these things happen in the first place.
Well, let me just say, I also recommend the daily chart. I think that is something you share so well with people, is the daily chart. It's slower. It's just a slower chart. And so when things are slower, it's like you're driving a slower car on the road. So if you're driving a slower car on the road, you don't have to have lightning fast reflexes. You can kind of be leisurely about it. And so when things happen, when someone pulls out in front of you, you have time to correct, or you have time to not freak out, or you don't even notice it because of the speed. When you are in an F1 race, one little twitch means you crash. And so going down in time frames on a chart is simply going into a faster car. And when you have a faster car, you have to be hyper aware. You have to be, firing on all cylinders and having all these adrenaline things coursing through your body. If you're new at this, that is a guaranteed crash. So I will highly recommend people do the daily chart. Once you do it for a couple of years and you want to go down to lower time frames, I'm all for it. But Patrick, that's something I absolutely love that you share with people.
Well, thank you. Yeah, and I've said that to people too. I'm like, look, let me give you a I keep going back to this word, very regimented, very strict, very disciplined blueprint as to how to do things. And then if you want to take some liberties here or there, or if you want to change, like go down to a lower time frame because it makes more sense based on what's going on in your daily life, then maybe do it at that point. Once you have this down and once you've actually really put the time in and have experience. But before that, we got to get these emotions in check. We got to get these brain chemicals to stop working against us. And so that's why I always recommended things like that. But I appreciate that, especially from an intraday trader like yourself, especially somebody who has had so much success intraday trading like you guys have. That does mean a lot. I appreciate that.
Well, thank you. So again, position sizing, avoiding news, and you kind of touched on this a little bit. I definitely don't have time to get into how to trade news. But number 3 is avoid binary outcomes. Now, binary just means win or lose in this situation. When you put yourself in these binary situations where you literally have to fight or flight, it's tough. And anything you can do as a trader to reduce the amount of binary outcome situations you put yourself in, it's going to be better. One of the things we do all the time at Maverick, especially around news events, is scaling in and scaling out. So when you take a position before a news event, it's like a fifth of a position, like a fifth of the position size you usually take, with a 5 times greater stop order than you would have ever had in your full position. Now look, it's still the same dollar of risk, but now you're not going to be triggered out by the big banks coming in and moving things around, because that's all they do. They move them around, and then 15, 20 minutes later, the real trend emerges, and they've collected everyone's stops, and then the real trend emerges, and people aren't in it because they got knocked out. So one of the things we do all the time is we scale into positions, take little positions here, add on, and then when we get a runner, a trade that's really working well, and then you say, oh, we're hitting resistance, I should sell here, and you take a look at your P&L, and it's a huge P&L, you're putting yourself in the binary situation again. Because if you don't get out here, you're going to give up some of these gains and you want to keep the gains. This is where scaling out. You just release some of the pressure. Scale out a little bit. Take a fifth of a position off. Take another fifth of a position off. By doing things like this, you avoid these big moments where you have to decide, okay, I've built up this 3x position now. I'm up 100 pips. I'm up a huge amount, and I want to sell, but it probably is going to keep going. How do you do that? Just don't make that binary decision. Scale out. Just scale out. So anything you can do to avoid these binary incomes, I highly recommend. Just don't have to make that huge decision.
So for context, can you tell us an example of what the opposite of that would be? Because some people listening to this might not quite understand, in the parlance of Forex trading, what would be considered a binary outcome. So give us an example of what not to do here.
All right, let me think here. So a binary outcome would be a big decision that you may regret later. Now look, that's just off the top of my head. But in trading, you have to make these decisions. And especially if you're not trading in a systematic manner where you're literally making decisions based on your emotions, which shouldn't happen. I mean, you shouldn't be put in these binary situations because everything should be totally planned before it happens. So look, if you're following a system and you have your entry, your exit rules, and you follow them religiously, you're good. But if you are in a situation where your trading plan says stay in it, and you are having feelings like you want to get out before your trading plan does, that's kind of that binary situation. And it really shouldn't happen. But if you are getting these emotions, just let off some of the pressure. Just let off a little pressure. Scale out a little bit. And then you can scale back in a little bit if it starts to look better again. It's just anything you can do to avoid those big moments where it's like, do I do it now or do I not do it now? Anything you can do to avoid those moments, your trading is going to be better. Following a system religiously, without deviation, fixes all of that.
Okay, now let me go ahead and add one here myself. And even if you are somebody who only trades the daily chart, this is something that I've told a lot of my traders, and it really made their jaws drop because they're like, "What? How? You're going to sit there and tell me I can't do this?" And I'm like, yeah, what I don't want you to do is, if you are a daily chart trader, if you're an intraday trader, of course you have to do this. But if you are a daily chart trader, we check in for about 10, 15 minutes a day, do what we need to do, enter trades, exit trades, manage trades, whatever the case is, and then we're done. In the next 23 hours and 45 minutes, what I want to make sure you don't do is look at your trade or look at the market itself in general. Everybody has their little apps on their phone to where they do this. I'm like, delete those apps. Do not look at it. Give yourself absolutely zero chance to have the market make you step in when you shouldn't be stepping in and make a move because of adrenaline or emotion or fear or whatever's going on in your head. Like I said, this was gutting to so many people because as traders, we like the lifestyle. We like being able to check in and take a look at the markets. That's what we do. And I told people, no, this is one of the worst things you can do because you have just greatly, greatly increased the chances of you jumping in and doing something silly. Even if it works, even if you were justified in jumping in and making these adjustments, long term, again, not sustainable. Let your system play out the way it was supposed to. Back when you back tested, there was no you jumping in, making adjustments. You just let the system do what it was supposed to do. So this might have been something that a lot of people forgot because I've said it maybe once or twice, then I kind of let it go. But let me go ahead and reiterate it now. Delete all of the Forex apps off of your phone except for maybe one. The company you trade through has its own app, and maybe you're not in front of your computer and you need to do something on your phone. Okay. But eliminate everything else if you can and resist the urge to look at it throughout the day. And the best way to do that is just by taking those apps off your phone. Easiest, simplest way you can avoid potential adrenaline from coming in and sabotaging what is probably going to be a very good trade.
I love that rule. And one of the things I've said for years, I wish I could remove the P&L column from your software, and I wish that I could remove your ability to look at your account balance until the end of the month. So imagine that. All the trading you have to do, you can't see your P&L, you can't see your account value until the end of the month. Now you're just trading. Now you're just trading because there's setups, and you're just going at it very systematically. And then at the end of the month, you look at your account and say, oh, that's how I did. Now, look, I know you could probably do the math in your head. What if you couldn't do the math in your head either? Where literally you just had to take setups, and let's say you didn't know what your position sizes were. Those were randomly generated. And then at the end of the month, you got to see what your balance was. Remove the P&L column you can delete the P&L column from your screen. Now, you can't delete or remove the ability for you to check your account balance, but I highly recommend don't check your account balance until the end of the week, end of the month, end of the year, whatever it is you choose. That's going to help reduce all of these things. Anything you can do to get adrenaline and all the negative chemicals out of your system, you're just going to be a better trader because of it.
Yeah, and unfortunately, that's super idealistic, and in a perfect world that would happen, but it just doesn't. Because for anything, you need your total account balance there, not so much your P&L, but your total account balance. You need to know that number so you can put in a proper position size. It's just a necessary evil. What I would maybe counter to that is, and this is hard to do because you can't just wave a magic wand and have this happen, but what I do is just not care about my P&L because I'm only worried about what it's going to look like at the end of the year anyway. And even that, I understand things are just going to happen the way they happen. But yeah, if there was a way we could just not see that number, it would be phenomenal. But unfortunately, not only is it there staring us in the face all the time when we do our work, but it's you do actually need it. So yeah, I agree to where I wish that column didn't exist, but I think that the best way to counter that is to somehow find a way to just not care what the number is. And that's something that's not going to come until you're a few years in and you've done this for a while and you've had good years and bad years, and you realize in real time that it just really doesn't matter at the end of the day. But yeah, that P&L and that total account column and that number is can really kind of low key bite you if you're not careful. So do your best to just kind of put that aside and just use it as a utility for what it is, and that is to tell you what your position size needs to be going forward and nothing more.
It's really too bad we can't do that, because that would make people better immediately. People who are starting out in this business, it would immediately make them better because it would force them to focus on the right stuff instead of the wrong stuff.
Yeah, so I guess to wrap this up, Rob, I think we all, whether we do a good job of this or not, we all kind of know at this point, at least I hope most of you out there know, that adrenaline has really no place in trading, and it's one of the number one things working against traders. I would say especially male traders too. It's a constant battle. But there are very simple things you can do to avoid it. If that means making adjustment to the way you trade, the way you like to trade, well, that's just going to have to be how it is. What do you like better, the actual art of trading, or do you like making money? You're going to have to make that decision yourself. Yeah, I think this turned out to be a really also low-key great episode too, because this problem plagues everybody. Nobody really kind of drills down and identifies it on a chemical level. And I think that's one of the greatest benefits of this little mini series we're kind of doing with brain chemistry, because if you can't identify the problem, you can't fix the problem, but we're identifying it on such a granular and relatable level that I think overall it makes it easier to fix problems like this if we're more in tune with them in the first place.
Absolutely. Your brain is literally working against you a lot of the time. And if you can eliminate that and just use your prefrontal cortex, you're going to do great.
Yeah, so when you have your own brain working against you in a market to where we're supposed to use our brains to succeed, how do you do that? Go back to episode 30 right here. Anytime you need help on this. And we will continue to keep this going. Thank you for listening to episode 30 of the Trading Psychology Podcast. For VP and Rob, we will see you next week.
Goodbye, everybody.